Hi, good morning, good afternoon, good evening, everybody. Thank you for tuning in. Let's just wrap up the day. Quite a straightforward day, isn't it? I don't think. Well, some of us were just quite worried on Monday, but as I always tell you, when it chops on Monday, it means it's building liquidity for something. Especially this last week, yeah. Now, when this happened, I already told you the bears were probably building some liquidity. It will be used. Have you remembered, especially when it started beautifully building it at the blue? I told you eventually this will be used. Right, and true enough, we got that today of that blue. There is some continuation I want to talk about, which could happen. We had our 20-day retest already today. So let's talk a little bit about that intraday with the intraday algorithms here. Very importantly, the very important intraday algorithm, I think, especially in a trend day, was to identify your dominant algorithm. That's the first thing. You need to know that. And also, when do you truly call for the reversal? Now, throughout the entire day, once we had the pink algorithm here, I mentioned you have to just be very careful if the cups are not closing, especially off that 5-day moving average. The bulls are just not in control. Sorry, give me a minute. Sorry about that. So in that case, you just have to be very careful if there's any bounce here. Treat it as a zombie trade. So you have to pay very close attention to that. So initially, right at the morning, identifying this pink algorithm was very, very crucial because you don't see the bulls trying to build liquidity. All the buying here, you need to learn to see that they are controlled. Maybe this one, right? Because you saw the green buyer participating. And I mentioned this. Pay close attention to this algorithm. Don't worry about this move, because if it wants to break out of that pink, you will see it appear again. If it wants to retest the 5-day, you will see it appear again if it's involved in an upward trend. But otherwise, this is just nothing. Treat it as a zombie, because you see at the end, it's still under the control of that pink algorithm right there. And sometimes you forget the pink algorithm is a selling algorithm. It's still selling. Understand that. So there are some very good morning trades that when we charted, we saw it here. At first was this magenta. You see the magenta was in control. Let me zoom it in because you have to see at the early candles. You still can be taking some beautiful trades here. Right, the first was this. Just take a look. Now you can tell the magenta was in early control. Now the magenta is a secondary. It's a stronger control algorithm for the bears. So when it appeared early, and some of you have traded together with me for a long time, I always mention if magenta appeared early, you just have to pay close attention. Magenta appeared early. And you see, this is a dual algorithm setup, right? We had something strong here. Right hand, after which it started forming a beautiful head and shoulder pattern here. You see it happen again here, right? Because what was that support turned into the resistance here with the magenta. You see magenta was building liquidity here at this range. Now this one was not a bad trade because there was teal here. So you see your stop loss. It's this is also green algorithm here. So your stop loss here can be quite controlled. Personally, I would have waited for this. This is not a bad trade, but you see this wick here that's formed, right? So you see that there is selling that's forming at this range here. So just trade at your comfort level. If you're waiting for this trade, that's fair enough too. But otherwise, once we broke out, there were several ways you could have taken the breakout and retracement trade here of this green algorithm. So identifying this green algorithm was also very important. right? Because once you are able to identify this green on the break, there would be quite an easy trade for you to catch, just because you understood a few very important levels here. The magenta, firstly, magenta was really important today. Then the teal, and lastly the breakout, which is this green algorithm here. Now, if you were trying to be there you go. If you're fine tuning your algorithms here, this would be better. An additional teal here to manage your stops here, but the original teal was here, right there. It's pretty good too. So understand your trades here. Now, once we retested the very important yellow level, 687 here, you see the bounce that started happening. I warned you there was a 20-day moving average of the Qs that's coming up retest here. So this is what you get, the 20-day moving average. Now this was where the Qs were. So pay close attention to that, right? You see the bounce that's happening anyway. Then we had that magenta algorithm that was trending up here. So will you short here? Absolutely not, because firstly, 20-day moving average for the Qs, and secondly, you have to understand this. This is important, right? Because this is a magenta control. So if you wanted to short this, you had to wait for at least for the magenta to break that you see right here. So some of you chase this, right? When you see the green, you start chasing this. And then I showed you how you should be chasing instead, right? When we break out and retrace. Otherwise, you have already identified magenta that's building that liquidity. If it forms again, let it build that liquidity. And sometimes you miss this trade. If you were taking it as a zombie, this would be a beautiful trade. But otherwise, if you missed anything, you have no structure, you have no trade. Right? Another one here, you see the green seller just participating today in the market very, very prevalently. You see it happening here again as well. Now, much later in the day here, this was quite an important level where we identified the blue algorithm here. Some of you would have tried to chase this, right? But I particularly mentioned this wants to. This is a very good. This is a very good point for me. I want to bring it up, especially here, right? So 1112. 1112 was here. Right? Now, it's important you learn how to be looking out, to train your eyes to see the algorithms. When you see the blue algorithm forming, there is a strong support here, right? If this wants to head down, there are several ways this can head down. So once again, as I mentioned, you have to learn to visualize what's the trade that's going to form, and you plan your approach from there. Now, the first will be this teal. So I want you to ignore all these candles, right? Just ignore them for now. At this point here, if you see the teal, there are a few ways this can head down. The first will be breaking down in the teal breakout retrace. That's fine. And when that happens, you want to see the green buying control, the green precision algorithm forming on the breakout here. The second way is if we have already this green that's forming, you have the 20-day moving average, you want to see it break out and retrace off that teal, breaking out that teal for trigger that stops and all the way down. Now, otherwise, you have to be more patient, wait for the structure to start forming. You see the buying here again. Now, I kept warning you. If the green buyer doesn't appear again, right, this is nothing. It appeared briefly here, but we started tapering with the magenta. So you just have to be very careful. If you caught a call here, if you caught a bounce here after support, this is a great zombie trade. As I always warned you, it's a great zombie trade. Treat it as a zombie. And you have to cut it once it breaks out of that green. Take more profits, protect your trade more, because you see it start tapering here once we approach, once again, the QQQ 20-day moving average. This is the resistance at there, the Qs. If you open up the Qs chart, which I told you to, and in today's instance, there are, even within SPYs 20 and 5, you had a very important level in between our trading range, so it can help you with more confirmation as well. And you see it beautifully right happening here. Now, once again, 20-day moving average, key support. We got whatever profits we need just from this move. This move alone is 3 points, more than enough profits. Don't get greedy. If you caught the trade here, I told you to protect more as well, because you don't see the green selling already. It's starting to taper slightly. And if you don't see any structure here, do not trade. I called it a day here as well. Right, you see we're just going absolutely nowhere. We do seem to be soaking up buyers here. I will be talking a little bit about that, because you see it's still the blue that's in control, even all the way to the end. Right, you still see the blue that's a dominant algorithm here. So if you took the bounce, now the danger about taking bounces off this is not ideal for a 0 day to expiry trade, right? If you were selling puts, right, and this is possible. This is a possible trade. So you have to understand that not all trades are created equal. If you were to be taking a 0 day to expiry trade here, you have to be more mindful of your strike, because you can get something. You can get a call here, for example, but still end up with $0 because you chose something that's here, for example. Right, so even if this was heading up, you would never have been green throughout the entire trade, because you're losing value, you're decaying the value of your options, even though we're heading up. So you have to understand, choose your trade more wisely. Sometimes, right, taking a trade here to here is even more valuable than taking a trade and just letting it run. You get it at cheaper price here than from here, right? So it's about understanding your choice of your strikes. Some of you have a trading small account. You choose the cheapest options without understanding strikes, and then you get chopped like that. So if you're selling credit spreads, right, selling your puts here, this is ideal. It's possible you can do that with the 20-day moving average there too. But I would be more careful, because this could have happened, right? Definitely would have happened. They didn't allow it to happen. They thought, hey, maybe another day or two, because they started building liquidity here. They don't have to be grabbed today. So you just have to be more careful when on hindsight, right, this looks obvious, but not always the case on live trading. So if you can avoid it, as I always mention, set alerts. It doesn't trigger again. To me, I just want to see this trigger again. If it doesn't, then so be it. I walk away. If you're taking a zombie trade, right, take some profits here and then call it a day. Set alerts at the other end. If it starts to break out of a larger move, you're ready to, because this would show that the chart would have closed. The bulls will have closed the cups and soaked up all the sellers here. If you extrapolate a pink algorithm, for sure you would have been able to see a trade here too, right? So you do see that there is some building of liquidity here, but generally it's just chop. You can always find a good trade. I'm sure there was a good trade here if you were to be charting diligently, but sometimes call it a day, especially when you had such a great morning as well. Such beautiful structure, two very clear natural targets that we were looking out for. The Q's 5-day, this yellow 680, 687, as well as this 20-day moving average, all well within the dominant pink algorithm here. Absolutely beautiful here, right? So once again, so be it. If you didn't trade well today, it's all about practicing. Remember, this is a skill. It's a lifetime skill. You have to learn how to stack up your learnings and your practice. It doesn't mean, you see, you came from somewhere else where it depends on luck. And you have a refreshing change of your trading attitude and your trading principles, because you realize that there is a skill level that's involved in this. As you get better every day, you will literally get better every day. You're not dependent on luck. And that's the difference, right? So don't rush this, right? Take your time to learn this. Don't be wasting too much money. trying to force trades, right, and losing money, what happens is you discourage yourself and you create false learning points for yourself. What actually works, because of your bad habits, you don't make it work, and you start to think it doesn't work. So you have to understand that it's truly about being patient and learning the skill and taking your time to do so. Right, anyway, beautiful day today. You were worried, I mentioned you were worried about chops. Don't be. Whenever you see chops happening, remember this last week, yeah? You remember this. I told you that they will use it eventually. They will use it, and you see them using it again. Right, anyway, to the 30-minute chart very quickly. Let's prepare for tomorrow. Let's prepare for Thursday. Now, I mentioned the blue. If it wants to dump, you see the blue. Yeah, we had the blue here. Right, this was in the early morning. We had that perfect green. Right, this is where you see that rejection here of that green selling. So that's great. You have the green selling here. And the only thing was that it didn't build liquidity here. It was not necessary because we were in the strongest selling rhythm here. This is absolutely beautiful, because from moving average to moving average, this was a beautiful natural target trade here. And then what you need to look out for right now is if the blue will continue to build liquidity. Now, as I mentioned, we closed the cups here at the 20-day moving average. So this was quite straightforward, right? We closed the gap already. Look out for that 20-day moving average if it wants to head down. So you have to pay close attention here right now, whether it starts to form that. So you see the liquidity formed here. Yeah, right. So pay close attention. If it wants to head down, you will not miss it. If it wants to head down once again, you see the selling is always in that strong green if it wants to head down. Right here as well, but we had a bounce here. And whenever blue is in control, so pay close attention to that blue here. The other area I want you to pay close attention to will be this. I talked about this as well. The market wants to grab the liquidity. They can do it easily with the 5-day. If it wants to take a little bit more time, then allow the market to build more liquidity here, especially off that green. By then, your 5-day will start to turn into some sort of support before we start grabbing the liquidity on the way up here. Now, pay close attention to who's in control, because if the blue is not in control, this is not going down. The liquidity here, remember, this was built and only used a week later. So absolutely it can be taking a long time if the market wants to build the liquidity. So just pay close attention to this. Settlers, don't be forcing trades. A big problem is some of you predict forced trades, and the market knows because you place your order early. You're forcing a trade, and well, it doesn't work out because you don't learn to be staying on the sidelines and waiting. You get married to your position early, and that's it. So back again, 5-day in the middle of the wedge. It's the same old. You just have to be very careful, but yet just take a look. Whenever this happens, this is great. Some of you lament or even complain about liquidity wedges. This is fantastic. What's the problem with that? You don't realize that if you're selling options, right? This is so ideal. A plateauing Bollinger is so ideal when you're writing options, right? So this is great, and this is the reason why last year so many people are making so much money writing options, because the market chops like that. But we're technically not chopping, because take a look, intraday you could have caught 3-point moves, 3-point moves, 3-point moves. You see what I mean? Or even if you caught the bounce here, this was a 3-point bounce. Plenty of money to be made day trading, and plenty of money to be made while writing options and managing a portfolio. So there is stability in the long term, which is what you need, but yet there's volatility in the short term, because you are able to find profits in the charts even with 1 point, 0.5 points. So understand that. This is great. Never ever lament about liquidity wedges. This is great too because you see, that's the point of retail traders. If the market is chopping, isn't that great for you? You set alerts, you go out and enjoy your day instead of being stuck here at the charts. So find something purposeful apart from your life. Go make money somewhere else while you wait for the market to give you a chance to multiply your resources. You see, the stock market is a multiplier. If you look at it that way, you're going to do so much better, right? If you have a day job, you're working, that's fine, right? Because you do your duty, because this is purposeful. There's purpose in what you do. Some of you very big purpose, and deeply respected by the society for your work that you do, right? Fantastic. You're impacting people. And when you work this day job, you learn how to multiply it in the stock market. And that's how you build your wealth. So likewise in day trading, this is a way to multiply your what you are making. So treat this as a multiplier, right? Instead of treating this as a way of grinding. You're not supposed to grind on the stock market. If you're grinding on the stock market, you're doing it wrong. So you have to understand that. And so set alerts. If the alert's triggered, in this case, I set my alert at 20-day moving average. You see the alert's triggered. And I was waiting out for the QQQ. Yeah. Beautiful. Just one trade. This trade alone, let me tell you, it's more than enough. It's more than enough. There's a natural target, so you could have taken so much more profits instead of waiting for runners to run. One trade here, that's more than enough. It's very good profits. And all because you waited, you set alerts, and then it heightened your alert. So now you're waiting for the setup that you're prepared for. Now, when you understand this, you go off to live life so much more meaningfully and victoriously, right? Instead of getting trapped here. Because you don't want to spend too much time mindlessly here and getting bored. This is where you start making mistakes. Or you start building gambling habits because you start to want to chase the high. You start wanting to chase the wins. Or as I mentioned, some of you like the thrill of losing. I don't know why, right? A thrill. You want that thrill of not losing, of edging yourself out of losing. But eventually you lead yourself to defeat. So don't. Be careful. Right, so straightforward day, just prepare as we wrap up the week tomorrow and Friday. This will be quite crucial that there is very clear ranges here now with the 5 and the 20. Watch out for the Qs as well. The Qs we wrapped up, we ended the day at the QQQ 5-day moving average. So this, once again, natural targets, right? So the QQQ 5-day moving average was where we ended up in. So 20-day to 20-day. So if you were, taking a less risky trade here, if you scaled down or if you took dollar spreads, as I always like to call them, right? This, if you've been with me, I like to take dollar spreads. You could have made some money here too. Now, I will be, if you don't understand quite a lot I'm talking about, I will be running a course starting this weekend, right? I'll do it weekly, live stream format, but you have to be a Discord member. Please sign up right now. I'm increasing rates for the course, but it's free now for existing members. So please do sign up. It's quite important. You have to do that if you're serious about learning. I will be running through it. This is why I'm doing live streams every day too now. Because I want to make sure that you know what you're doing every single day. You have more guardrails around your mind and your trading so that you are more careful, right? So if this wants to take, you realize it, right? So just let it grind up instead of trying to force trades. My goodness. I want you to be honest with yourself. How many of you are forcing trades here? It looks great, isn't it? But if you do not have microstructure to take a trade here, this doesn't matter. All right, this doesn't matter. So just be more careful, right? Sometimes you just got to know your edge. Some of you thrive. To me, I thrive in precision algorithms. That's all I need, right? So I look out for that because I just need that one burst of good move and I can make more than enough. Some of you, I don't see an edge in things like that, right? You're just setting yourselves up. If you're taking more than 5 trades, yeah, you're just setting yourself up for more margin of error. If not today, then tomorrow. So that's the thing. You have to be surgical. You have to be more precise. The more trades you take, the more errors you're going to make, right? If your entire shtick about profiting is about taking as many trades as you can, you are not going anywhere, because you're increasing your margin of error. You're increasing your failure rate. You have to understand that the more you trade, the more you're going to fail. So you have to learn to identify, and what best than to have penny perfect algorithms to guide you into knowing how to set up your playbook for your next trade. So you just have to know your edge, and it's different for every single one of us. Some of you have a small account, you just have to take the most conservative trades. So you have to wait for the key levels retest. This is why I mentioned look out for the 30-minute chart. If you have key level retests, you can take good trades. And sometimes it doesn't happen daily. It happens maybe 3 times a week only. So if you have a small account, you don't have the luxury of taking every single trade. Now, some of us, we have larger accounts. We have a big and small account. We have gambling accounts. So we can take riskier trades. When I say gambling, just means you're undertaking more risks. Sometimes it's not calculated. So therefore, you can take trades like that. I would have taken that with a small account if I wanted to. But otherwise, just be more mindful of forcing trades, right? Know yourself, don't force trades. It's about accumulating wealth, and this is why I set a very simple principle for you. Some of you just one a day, right? Just take one trade a day. Look out for the best trade for the day. Take the trade, red, green, whatever. You call it a day. Trust me, you do this, you will be green in the long term. You have to trust me. You will be green in the long term, right? Just don't blow your account every day. Just focus on the principles and the rules that I set out for you. For some other of you, 3 trades a day. That's all you need. So look out for good 3 trades, and you realize most of the trades in midday is absolutely trash. So focus on the start of day and end of day, right? Just 3 trades a day. So you avoid over trading in midday, right? Understand that. And the other rule was if you have 2 red trades, you call it a day, right? So if you have 3 trades a day, right? Simple. First 2 red, you skip the third one. That's it. You call it a day. The second 2 red, you're done, right? If you have the first red and the second green and the third red, you're done too. So that's the principle behind 3 trades a day and 2 red trades, you're out, right? So you have to be more selective. Learn to do that. A smaller account, 1 a day, right? 1 a day, it's all you need. Truly, in the long term, you will see the results. All right, you will minimize your loss, survive for the day as well. So quite straightforward, right? I will see you tomorrow for opening bell. Thank you for tuning in. Have a good night, everybody. See you tomorrow. Thank you.